You'll be able to do that throughout the day, which means I will be able to do that throughout the day, which is important for me too. Okay. You're going to see this slide at every session. The entire day, as well as each individual session, is sponsored by the Nadex Compliance Department. I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this entire day is an educational session. Please do not construe anything we say as a buy or sell recommendation. We are doing this for your educational purposes. That will become abundantly more clear when I do what I like to call an off-roading session, when I demonstrate some of the concepts that we have discussed. I don't do this slide very often, but because we've got so many new people, I mean, we've got thousands of people registered for these sessions, more than half of which are brand new to Nadex. So I like to give a little bit of a brief background on who I am. I'll be your host for the entire day. I did join Nadex in 2019, so a couple of years ago. It was a continuation of some pretty extensive experience in trading and financial services. Decades ago, I started with Anderson Consulting, which is no longer around. It's now Accenture, if anyone remembers those. I did spend 8 years on the floor of Chicago's exchanges as a trader on the floor. Those crazy people with crazy colored coats waving your hands. That doesn't even really exist anymore, except for in little pockets here and there. Everything's gone electronic. And from there, I've had executive roles at exchange and brokerage companies, having years at Eurex, which is a large exchange out of Germany. It's part of Deutsche Börse Group. Box Options, which was the Boston Options Exchange, the New York Stock Exchange, and then E-Trade before I came over to Nadex, which is owned by IG Group. I do have a BA from UCLA as well as an MBA from UCLA. So a little bit of background just so you can get to know me a little bit more. Now, what is our agenda for this particular session? And I'm just going to do this quickly so you can see what we're going to cover. I am going to do a few moments on who is Nadex. Again, we've got so many new people. I'd like to just introduce Nadex, and then we're going to jump right into what is a binary option. And we're going to talk about how they work. We're going to define them. We're going to talk about how the price of a binary option changes and how it can be impacted by time, as time moves forward, or as the underlying price moves around. And I'm going to show you all the different choices that you've got with binary options. Again, everything today is going to be focused around equity indices, and I will do a practical demonstration on the Nadex platform so that you can see how this works in action. Who is Nadex? Nadex is an acronym. In the financial services industry, we love our acronyms. It is simply short for North American Derivatives Exchange. Now, what is really important with Nadex and binary options is we are a regulated exchange. We are regulated by another acronym, the CFTC. The CFTC is the Commodity Futures Trading Commission. That is a U.S. regulatory body. It is the same regulatory body that the large futures exchange have to report into, such as the CME, the Chicago Mercantile Exchange, as well as ICE, the Intercontinental Exchange. They own the New York Stock Exchange. We are regulated. Now, the reason I really point that out is because if you go on the internet, you may be able to find other binary option providers on the internet. There are only 3 binary option providers in the United States that are regulated by the CFTC. One has weather contracts and doesn't do much volume at all. The other one's a very new exchange, again, doesn't do much volume at all. So Nadex is really the premier regulated binary options exchange in the United States. And the reason that's important is because there are some nefarious actors in the binary option space globally, and you hear these horror stories about people not being able to access the money in their account or having some type of restrictions or only being able to do certain types of trades. All that is out the door. We are a proper regulated exchange in the United States. We have to adhere to all the laws, rules, and regulations of the United States. We have a regulatory body that oversees us, that audits us. We have to report into them. So all of that is out the door when it comes to Nadex. We are a proper regulated U.S. exchange. Now, what did we build? We built contracts designed for the retail trader. This is becoming so much more popular now, and we're hearing about all these new retail traders coming into the financial trading space because they want to access that action, and people want to build wealth, and individual retail traders are stepping into it themselves. Nadex has been around for a long time, and we built contracts specifically for retail traders. Now, what does that mean? It's two things: low cost of entry and fully defined risk. When you get into a trade at Nadex, you do not need thousands or even hundreds of dollars. You can have very small quantities of money and access price action in the markets. So it's a very low cost to entry. And when you get into a trade, you know exactly what you could potentially make or lose before you even get into the trade. So there are no surprises. No surprises at all. No maintenance margin call. Throw that out the door. We simply don't have that. You know what you put into a trade to begin with. That is the most you can absolutely lose. You can't blow out your entire account. You can't lose everything that you have. When you put on a trade, whatever you've put into that trade, that is your risk. And you know it up front, and we calculate it for you and we show you. And so it really was designed for retail traders to be able to access the markets and get into the price action in a way where they can control their risk. And we've got binary options, but we also have knockouts and call spreads, which I will get into later. And traders are looking for short-term price action. So that's the introduction to Nadex. I want to get into, you know what, before I get into binary options, if you are brand new to Nadex, or if you've been around and you weren't aware of this, we do have a Refer a Friend program. Now, if you have a live account, you have to have a live account. We also have demo accounts where you can open up a demo account and practice, which I highly encourage. It gives you an ability to practice on the platform, understand the products, see how things move around, and get a little comfortable with it. Your experience in a demo environment and a live environment will be very different, but at least it gives you a feel for how things work and where you can click. But if you have a live account and you refer a friend, and you give them your link, everyone's got their own personalized individual link. If you share that with your friends, if they use that link to sign up and they place 5 trades within 30 days of applying for a Nadex account, they get $100, you get $100. And a lot of retail traders like to trade with their friends. So it's a great way for you to get $100 and for them to get $100. You can invite up to 10 friends. So you could end up having $1,000 in your account to trade with if you bring 10 of your friends along and you trade together. So interesting program that Nadex has got. I like to point that out. All right, so what is a binary option? And let's first define these. Let's talk about what a binary option is, and it is a contract. Right? It is a short-term contract, and it has very defined risk reward. And that contract is a statement. It is a prediction, and it's made up of 3 components. All right, the first component is the underlying market. So I'm going to use an example, the Dow Jones Industrial Average. At Nadex, we call it the Wall Street 30, but it can be any one of the equity indices, the major equity indices. It could be the S&P 500, it could be the Russell 2000, it can be the NASDAQ, right? So we've got an underlying market. That's the first component of a binary option. And then there's going to be a condition. Sometimes that's referred to as the strike price, the level. I'm going to give an example. Be above 35,000, all right? So we've got a market, the Dow Jones, the condition, will it be above 35,000? And then there's an expiration time. And we offer a variety of expirations for you to choose the binary option that you want. It could be 20 minutes from now. It could be this hour. It could be in 2 hours. It could be at the end of the day. It could even be at the end of the week. All right, we've got a variety of different expiration times, and there's a reason why we do that, and we'll cover that when we start talking about how binary options are priced and how the price of a binary option moves around. But let's just take it for what it is. It is a prediction. It has an underlying market, the Dow Jones Industrial Average, a condition, will it be above 35,000, and an expiration time in the next 20 minutes. Will the Dow Jones be above 35,000 in the next 20 minutes? That is a binary option. Now, you can both buy or sell binary options, right? And we will get into that as well. Now, you can buy a binary option or you can sell it, and we're going to talk about what that means. But it doesn't matter whether you're buying or selling, your risk as well as your reward are both clearly known before you get into the trade. It is calculated for you in the order ticket, and you can, unlike other binary option providers, we've got a variety of choices, a variety of markets, a variety of conditions, a variety of expirations, and we allow you to both buy or sell. So the power is in the hands of the retail trader to choose the product, the condition, the expiration time, and whether they're buying or selling. It's the complete control in the hands of the retail trader. Now, a binary option will trade in a range. So the price that you're looking at will trade between 0 and 100. Now, we're going to talk about what that 0 or 100 represents now. Now, a binary option is a true or false prediction. Either the event happens, will the Dow Jones be above 35,000 in the next 20 minutes? Yes, it's true, or no, it's false. Now, if it's true, the option will settle at 100. So 20 minutes from now, if the Dow Jones Industrial Average is anywhere above 35,000, 35,001, it's true. If it's at 35,000 or lower, it's false. Okay, so the question is will it be greater than? So it's got to be greater than, and that's it. It is either a true or false. That is why it's a binary option. In the end, there are only two outcomes. The outcomes are it's true and it goes to 100, or it's false and it goes to 0. Now, what does that 0 or 100 represent? Now, I'm going to talk about this now, and then I'm going to show you because we even do the math for you. But the price can be thought of as reflecting the probability that the event will be true as determined by the marketplace. And we'll talk about the marketplace as well. So it's a probability. You're really trading a probability. If the Dow Jones Industrial Average were right at 35,000, and the question were, and the binary option were, will it be greater than 35,000? The price of the condition, the strike price, the level, and the current indicative price are right near each other. The probability that it will settle above 35,000 is pretty much equal to the probability that it won't. So there's a 50% chance that it will be true and a 50% chance that it'll be false. So 50-50. You would expect the binary option to be trading right around 50. All right, because it's a 50% chance. All right, and if the Dow Jones were trading above 35,000 right now, all right, and the question were, would it be above 35,000 in the next 20 minutes? Well, since it's already above that level, it's what we call in the money. The condition is below the current actual price. There's probably going to be a higher probability than 50. It might be 60 or 70% that it will stay above that level and finish above that level. And if it were below that level, if the question were, will it be above 35,000 and it's currently trading at 34,900, so it's below, it might be below 50. It might be a 40 or 30% probability. So really what you're trading is the probability that the statement is going to be true at that moment in time, determined by the marketplace. Right? The marketplace is pricing these probabilities, and everybody makes up the marketplace. We will get to that in a bit. So the other thing I'd like to point out is if you're familiar with other traditional listed options, time to expiration and volatility will be factored into the price. And I will go through examples of that. All right, I will go through examples of that. But the important takeaway from this slide is that what you are trading is the probability that the event will be true. All right, and we make this very easy for you when I show it to you on the order ticket. Now, the other thing that represents, because the very first thing someone's going to ask is, well, what about the money? Let's talk about the money. And we made it easy. All right, we made it easy because we made each one of our binary options worth a maximum of $100. So while the binary option will be traded between 0 and 100, and that number represents the probability that the statement will be true, it also is the value of the contract at that moment in time. So if a binary option were trading at 50, there's a 50% chance it would be true and a 50% chance then it would be false. It's going to be trading for 50. That's also $50. Right? So if you bought one, you would have to put up $50. Now, if you sold one, you'd also have to put up $50. We will get into that. Actually, I think we get into that right now. The amount of collateral, what do you have to put in when you trade a binary option? And the collateral that you put in is your maximum risk on the trade. And like I said at the beginning, you cannot lose any more than you initially put into a trade. So if your collateral is the most you can lose, that's what you put up. You cannot lose any more than that. Now, if you're buying a binary option, it's real simple. It's whatever you're paying for the binary option. If I bought a binary option for 40, all right, there's a 40% chance at that moment in time that it will go to 100. I'd have to put up $40. All right. If I sold a binary option, the amount of money is 100 minus that price. And that is because if you sell it, you're looking for it to go to 0. So if I sold a binary option at 40, there's a 40% chance it's going to go to 0. So if I sell it at 40, I'm looking to make $40 because I want it to go to 0. The most I can make is 40. But the most I could lose would be, it becomes true, it goes to 100. So it goes from 40 to 100, I would lose 60. I would have to put up $60 if I sold one at 40. Right? So if I'm selling one at 40, I could potentially make 40, I could potentially lose 60. If I'm buying one at 40, it's the exact opposite. I'm putting up $40, but I think it's going to be true. I'm hoping for it to go to 100. I'm hoping I can make 60, right? And now there's a return on an investment there, which we're also going to discuss. So that's it. It's a pretty simple calculation in terms of what you have to put up, and it's your maximum risk, and what you could potentially make. Now, you do not have to do the math on this. We calculate all this for you on the order ticket so you can see what you're getting into right up front. So let me walk through an order ticket so you can actually see what I'm talking about. Now, here's an order ticket for the Wall Street 30. That is the Dow Jones Industrial Average. And on an order ticket, you're going to have an indicative price. All right, when I took a picture, the Dow was trading just above 35,000. Okay, it was trading at 35,044. Now, there's also going to be an expiration time. In this particular contract, there was an hour and 42 minutes to still go. Then you're actually going to get what the binary option is. Will the Dow Jones Industrial Average, will the Wall Street 30 finish higher than 35,060 at 4:15 p.m.? There's your binary option. The Wall Street 30, your market, the condition, 35,060, and the time, 4:15, which I know is in an hour and 42 minutes. Now you can see that it's currently trading at 35,044, which is below 35,060. So since it is currently trading below the condition, the price for that binary option is below 50. I do have a bid, I do have an ask. All right, there's a bid at 36, there's an offer at 39.5. If I wanted to buy one, I know I could buy one at 39.5. If I wanted to sell one, I know I could sell one at 36. Do I have to trade on those prices? And the answer is no. In fact, here's an example where I was going to try to place a bid. I want to buy one. You can see the buy is blue. If I were trying to sell one, the big sell button would be red. And I'm trying to buy one at 38.75. Now, will I buy one at 38.75 if I put a bid in at 38.75? And the answer is maybe. If we have what is called a central limit order book. It is an open order book. Anyone can place a bid, anyone can place an offer, and that is why I say we have the marketplace pricing these binary options, because the marketplace is made up of anyone who wants to put in a bid and anyone who wants to put in an offer. We do have multiple market makers who stream liquidity, so there's always a bid or an offer in case there's not a natural, but the customers can fill in the order book if they would like to put. You can put a bid anywhere in between the bid-ask spread. You could put it with the bid, you could put it below. I could put an offer anywhere between the bid-ask spread. I could put an offer with the offer. I could put an offer in up above. So anyone can put an order into the order book. If I were to put this order in, submit it, you would see that it wouldn't say 36 bid at 39.50. You would see it say 38.75 bid at 39.50. And if someone wanted to sell one, they'd have to sell it to me. It's a price time priority. The first person to put that bid in is going to be the first person who would potentially trade if someone wanted to sell it there. In the upper left-hand and upper right-hand corner of the prices there, that's how many contracts are currently bid for and how many contracts are being offered. Now, I did mention we give you all the math on the order ticket. If I were to buy one at 38.75, that's the most I could lose. I could lose $38.75. The math is right there for me. What would I potentially make, or what could I potentially make if it settles above 35,060 in an hour and 42 minutes? It would go to 100, and I would make $61.25. We calculate your maximum profit or your maximum loss on the order ticket before you even enter the trade. You know exactly what you're getting into. Now, at the bottom of the order ticket, we also give you some really handy numbers. First, I'm going to talk about that bottom number, that probability of in the money. That number is, if I'm buying, it is the midpoint between the bid and the ask. That is where the marketplace is pricing the probability at this moment in time that if you were to buy one, there's a 37.75 chance that it'll go to 100. Now, these are statistics. These are just probabilities. This means, does that mean, oh my God, it's such a low probability that'll never happen? No, in theory, 37.75% of the time, it'll go to 100. Now, that also means that 62% of the time, it'll go to 0, in theory. So now, your probability of in the money, if I were selling one, it would be 100 minus 37.75. I will show you that. So it gives you the probability that your trade will finish in the money. That probability in the money is calculated whether you're buying it. If you're buying it, it's the midpoint between the bid-ask spread. If you're selling it, it's 100 minus that, the probability that you will be in the money at expiration. Now, the ROI will calculate, again, whether you're buying or selling, on how much you're risking and how much you could potentially make. So if I were to buy one at 38.75 and potentially make 61.25, now we do factor in fees. It does cost $1 a side. So we have factored the dollar in and out, but your maximum return on investment, if you put in 38.75 and you actually went to 100, it would be 148% return on your money. It would be 100 because you risked 38 and you made 61. Okay, so really important, that you understand what these numbers are. You don't have to calculate them all yourself. We calculate them for you. So you can then look at a chart. You can make a determination on what you predict and what you think is going to happen in whatever product, at whatever strike, in whatever time frame, and we calculate your potential loss and your potential reward on the order ticket. We even give you the probability that you'll have a successful trade when you place the trade, as well as what your potential maximum ROI is based upon the numbers. You don't have to go calculate all this for you. We do it for you right on the order ticket. All right, that's enough about that. I've been seeing all these questions. I love by the way, today is very interactive. Keep asking the questions. I will tell you, if you do not get an answer to your response, I've got some folks in the background trying to answer them. I will eventually be on there answering as well. But we will have someone follow up with everyone who has a question. And I do want to remind everyone this is being recorded and the slide decks are available if you email customerservice@nadex.com. Now let's talk about how the price of binary options move. All right, I think this is really important for you to understand this concept, because this will help you if you get into binary options, how you would trade them. Now, we mentioned that the price is, can be thought of as the probability of the event being true. And the probability of that event being true is going to fluctuate. It is going to fluctuate because time is going to change and the price of the underlying is going to change. Now, the price of the binary option does not necessarily have to move exactly in line with the underlying. And I'm going to go through an example of that, but just because the underlying goes higher does not necessarily the price of the binary option will also go higher, and there's a reason for that. I will explain that. I'm going to show it to you, and that is because time to expiration and volatility can impact the price of the binary option. Now, I am going to walk through an example here. This is, and you can see that will the Wall Street 30, will the Dow Jones Industrial Average be greater than 35,000 at 3 p.m.? Now, the time frame, I'll just say this was a day, but this time frame could be 20 minutes. This time frame could be an hour. There's the 35,000 level on the chart. And let's take a look at what the price of the binary option does throughout the day as time moves forward and as the price of the Dow moves up and down. So early in the day, you can clearly see the Dow is above 35,000, and I'm going to use the midpoint. There's a bid-ask spread on there, but the midpoint is 56%. At that moment in time, the market was saying there's a 56% chance that at expiration, this contract will settle at 100. Now, it's anywhere above that green line, it will settle at 100. Anywhere below that green line, it is going to go to 0. Now, early in the day, it makes a move lower, and you can see that the price of the binary option also went lower. It didn't drop dramatically. It went down to a 44%, but that's because there's still a lot of time left in the day, and clearly there's some volatility going on in here. So it's still being priced with a 44% chance that at the end of the day, it will settle above 35,000. Now skip ahead, and half the day is gone, or half of this time frame is gone. This is what we call time decay. The contract is at pretty much the same place where it was earlier, but instead of a 44% chance, it has dropped to a 36% chance. The price of the binary option decayed because now there is less time in the day for it to potentially finish above 35,000. Now, it does make a move above, and now the move on in the binary option is a bit more dramatic, right? It jumped all the way to 74%. As you get closer to expiration, the volatility in the price of the binary option will be more pronounced. It will be much more dramatic. Some people love that volatility in that probability changing, which is why some people love trading 5-minute binary options. They want to see that price moving all over the place. Some people are a little less comfortable with that much volatility and the price swinging around so much, so they choose a slightly longer duration binary option. It drops down below. It went from 74% all the way down to 24%. And in the end, as long as it's above that line, anywhere above that line, it'll go to 100. If it had finished anywhere below that line, it would have gone to 0. So now you can see how dramatic that price, the probability of the event being true, the price of that binary option, it can be pretty significant toward expiration. It will still move around further away from expiration, but it all depends upon how much time is left to expiration and how much volatility there is in the underlying. Now, when I mention volatility in the underlying, I'm going to go through a very low probability, and I'm not going to spend a lot of time on this. You can go back and review it, but here's the same example, and let's assume the volatility was very low. You can see that the price is not swinging all over the place, and it stayed below 35,000 the entire time. Early in the day, there's still a 44% chance. Later, it's gone down some. The day has disappeared. It's dropped down to 34%. Now, remember when I said the price of the binary option does not have to move in line with the underlying? In this next move, notice the price of the underlying, the Dow Jones Industrial Average, went higher. It clearly went higher, but the binary option went lower. Now, why did that happen? Because there's very little time left in the day. It's still below 35,000. There is not much time for that to pop above 35,000. And at that moment in time, the market was saying there's only a 20% chance that it would settle in the money, meaning an 80% chance it's going to go to 0. Now, could it have gone to 100? Yes. There's a 20% chance. Anywhere above that 35,000, it would have gone to 100. It would have been a very volatile move, which you wouldn't have expected because the day had been very non-volatile. And in this case, it dropped down to 0. The same would be true if it were above, but instead of decaying down towards 0, it would actually decay up toward 100 because it stays above the binary, because it stays above the condition, the 35,000, the entire time. Okay, that's price of the underlying, time moving, and volatility. And you really get a feel for how these move around. I am going to do an example. I want to keep moving along so that I have some time, maybe 10 minutes, to do an example on the platform so you can see these in action. With Nadex, I do like to cover this, that for each underlying market, and we have a variety of underlying markets, and each time frame, so whether they're 5-minute binary options, which we have in foreign exchange, but 20-minute binary options, hourly, 2-hourly, daily, weekly, we will have multiple conditions, so multiple strike prices, and if things are really moving around, we'll add more. So as an example, on the left here, you can see, here's just a sample of the indices that we've got. The US 500, which is the S&P 500, the small cap, which is the Russell 2000, the Tech 100, which is the NASDAQ, the Wall Street 30, which is the Dow Jones. Underneath each one of those, you see we've got different time frames. So you can choose the time frame that suits your trade. And within each time frame, then on the right, we will have multiple conditions, and there'll be prices for those conditions, the probabilities. And if you want to trade a higher or lower probability binary option, you can choose to do that. You want to buy it or you want to sell it, you can choose to do that. So you'll have some choices to make on what you want to be doing based upon your opinion on what you think is going to happen. And we do give you that variety. There are binary option providers out there who don't give you any choices. They just give you one choice. Is it going to be higher from right here? And while that is very simplified and you go, great, but the truth of the matter is if you want to own your trade and you want to have the ability to do different things, having the ability to choose your product, choose your time frame, choose your condition, it does empower the retail trader. Now, news flash, blinking lights, alert, alert. If you were dozing off there for a second, an important rule when trading binary options. I cannot emphasize this enough, so I'm hoping I got your attention, because if you take nothing else away from this, please embrace this. Just because there's an expiration associated with a binary option does not mean you have to wait until then to see what happens. I'm going to say that again. Just because there's an expiration associated with the contract does not mean you have to wait until expiration to find out what happens. You can choose to exit your position early. That is also something that differentiates Nadex. Yes, you can choose to exit your position early. Now, why would you want to do that? One, you would do it to lock in a profit. All right, so let's just say you bought a binary option for 20. You risked $20. You had a 20% chance that it'll go to 100, an 80% chance that it's going to go to 0. Now, you bought it at 20. That's the most you can lose. And let's say it went and it became even at the money. It's now trading for $50. Now there's a 50-50 chance that it will go to 100 or it'll go down to 0. You risked 20, it's now trading 50. You might say, wow, I'll take that return. I'll risk 20 to make 30. I can sell it back at 50. I bought it at 20. I sold it at 50. I made $30. Thank you very much. I'm going to move on to my next trade. Think about that. I mean, and if you remember that volatile chart, that one where it was swinging all over the place, I could have day traded that several times. I could have sold it, bought it back, gone long, sold that one back out. You could have done that several times. And so instead of just one trade, you could have traded several times throughout the day. If you felt the market was going to turn or there were critical technical levels that you were looking for, you can exit the position early to lock in profits. Now, the other reason you would exit the position early is to limit losses. Loss aversion is very important. You've got to manage your risk. If you buy a binary option for 40. You bought it for 40, you're thinking it's going to go to 100, you're looking to make 60, and you're wrong. You bought it for 40, and then the day just kind of goes on and it goes sideways and it rots down to 20. It decayed down to 20. Now you've got to make a determination. I bought it for 40. I was looking for it to go to 100. The market's not doing what I predicted. Can I change my mind? Yes. Can I sell it back at 20 and just get out of the trade? Yes. And instead of taking all $40 loss, I might just decide to take my lumps and sell it back at 20 and lose only 20 and move on to another trade, which gives me, you don't have to lose everything if it goes against you. And you also don't have to wait until the very end, because what can happen is you can buy one at, let's say 30, and next thing you know, it's trading 80 or 90. The probability that you're going to get all of it is high, but it can turn around and go against you. What do you want to do? Do you want to keep risking that $80 now? If you bought it at 30, went to 80, do you really want to extract that last 20, or do you want to sell it for 80 and take your $50 profit and say thank you very much and move on to your next trade? You have that control and you can choose to do that. I cannot emphasize that enough. All right. I do want to spend 7 minutes on the platform because I think it's really important. But if you've got any questions, email customerservice@nadex.com. Email customerservice@nadex.com. That is also the email address that you would use if you want the slide decks from today. Email customerservice@nadex.com. They will get you the slide decks at some point. What I'd like to do now is, and by the way, follow us on our social media. I will mention one of these. Really important here too, the YouTube channel. Go to YouTube, search for Nadex, subscribe to the channel. Every morning, we're punching content out there every day, but every morning at 8:45 a.m. Eastern, 7:45 a.m. Central, we live stream. We live stream for 15 minutes and we talk about what happened in the markets that night, what you might be looking for that day, where there might be news announcements, where there might be volatility in the markets, where there might be potential opportunity. We do some technical analysis on the charts, but we do that every day. You can go, if you want to catch today's, you can go and you can see the recording. It immediately posts to Facebook. To YouTube. It's all on YouTube. So follow the Nadex YouTube channel, subscribe to it. If you can join in the morning, we're there. You can chat with us, and you can hear some analysis of what potential opportunities might exist for that day. And if you can't make it and you missed it, it's available. And on the Nadex website, you go to nadex.com, you'll find that there's a little light box in the lower left-hand corner to help you find the most recent one or when we're going live. So I would recommend that on social media. I want to jump over to the Nadex platform now, and I do want to do a demonstration. And I know this is difficult in the first session. I'd like to spend a little bit more time, but we had some housekeeping items all the way up front. But let's get into the binary options, and I do want to show you how this works. As you can see on the platform in the upper left-hand corner, we've got binary options. We do have 5-minute binary options. In fact, I will come back to that in a second. We've got 20-minute binary options. This is actually pretty good. We're going to play around with these 20-minute binary options. I'm going to do an example there. We've got equity indices, and if you go into the indices, you can see, there's every couple. Here, I'm going to refresh this because some of these have expired since I launched my platform. But every hour, there's a window. There's daily. There's weekly. You've got a variety of choices, a variety of indices. I'm going to jump over to 20 minutes. Since we were talking the Dow, I'm just going to go ahead and use this as an example, and I'm going to bring up. And I'm going to click on the Dow, and let's go ahead and I'm going to make this a 10-minute chart, sure, so we can get a little bit, I can zoom in a bit. I want to make sure everyone can see it. I am actually also going to hide, you can see all these strike prices on there, so you can actually see where the strikes are. I'm going to, no, let's go ahead and leave them on for right now. Let's leave them on for right now, because I want you to see how these volatilities move around. A bit, just in case. Now, let's actually open this up some. Okay, all these are different strike prices, and you can see how, you know what, I'm just going to open up a little bit more. Let's make this a 5-minute chart. Okay, I wanted to get all the strike prices in there just so you could see them. You do not have to show all these strike prices. You can hide them if you want, but you can see right on your chart. And if you're buying or selling, it'll highlight. If I were to sell this one, it shows me where the Dow would have to finish for this to be a profitable trade for me, and shaded in red. Notice that if I were to sell one right in here, the midpoint, notice how my probability of being in the money dynamically changes as the prices of these change. All right. If I were to buy one because I thought it were going higher, it's going to shade where I need it to be in blue. Wow. I mean, it is. And you can see how these probabilities are moving around pretty quickly, and how the probability, if I'm buying it, it's going to be the midpoint. If I'm selling it, it's 100 minus the midpoint. So your probability of success will change whether I'm buying or selling. My max ROI will also change whether I'm buying or selling. It'll calculate it for you. If I wanted, I'm going to go ahead and go, I think this is going to go higher. I want to buy one, and I'm going to try to put in a bid between the bid-ask spread. So 48. Actually, let's make it, look at that. It moves so quickly. And you can see how this can be pretty volatile. I'm going to place an order. I'm just trying to buy one at 40.75. There, you actually saw, it looks like there's my order. I'm trying to buy one at 40.75. Let's change that up to, oh, I filled. I was about to change it, and I actually got filled. Okay, I bought one at 40.75. So, and it's going against me. All right, again, no buy or sell recommendation. I'm just trying to trade. You can actually see my position is right here. I can see it on the chart. If I wanted to close this, if I said, oops, I didn't want to do that, I can just click close and liquidate my position. Or I can simply click on my order. Now, I paid 40.75. Maybe if it were to pop back up, I'd sell it at 60.75 and take a $20 profit. 60.75. Can I offer one up at 60.75? Of course I can. I can place that order, and I am now, you can see I've got an order to sell one at 60.75. All right. I would potentially make $20 because I bought it at 40.75. Now, I can sit here and watch, realizing that there's only 8 minutes to go in this contract, and I could see if I might, or, all right, I just want to give both sides of it. You know what? Maybe I made a mistake. I'm going to go ahead and cancel my offer above. I'm going to go here, and I'm simply going to take my lumps and close the position, and I'm going to lose $2.50. I lost a couple of bucks on the trade. No harm, no foul. I bought it, I sold it. I can go back over here and see what I bought it and sold it for, and I could make a new decision. So mostly what I wanted to show you is that the prices of these can be pretty volatile. All right. You can trade right from the charts. I can place bids and offers away from the market. I can liquidate my position and take my lumps if I'm wrong. You're in control of the trade.